Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 15th of May. All right, now to start the week, you're probably scratching your head wondering what's going on. The dollar index much higher. We're seeing the dollar sort of rally across the board, and it's more around the uncertainties in the regional banking sector. And there's also a few telltale signs, I should say, on the equity markets that are suggesting the US is heading towards recession, and that's sort of creating a dollar sort of safe haven buy situation. Dollar CAD up, look at Euro, hit, Sterling, Aussie, and Kiwi all break down through support lines and heading south. Now, this is a twofold situation. The uncertainty around the US dollar and the markets in Sterling, Aussie, Kiwi, and a little bit in the Euro would definitely be very long, right? The signs were a weakening US economy, weaker US numbers, weaker US inflation. It's a weaker dollar, right? But then the whole uncertainties around the regional banking crisis has made the dollar the safe haven, and that's where everyone's been a little bit screwed over. So just be aware. I don't think it's, well, we've got to watch the equity markets and a few other things closely, but this is a big clean out of stale positions. Okay, if we come back and have a look at the equity markets, they are a little bit lower, but they're sort of back in the range as well, with the NASDAQ sort of really shining through. Crypto's a little bit hammered. Gold, just a little tweak through that support trend line. I thought that might run a bit further, but the University of Michigan sentiment numbers on Friday showed a lot of weakness, and that sort of fueled the buying of, or the dollar buying situation. Oil, well, you can adjust this trend line now. It is still sort of tracking lower economic growth, recession fears. You got to think it's a lower oil price overall. But this week's got a lot to look forward to. And what I'm talking about is, if I just come to the calendar, we've got, there's something pretty much every day across every time zone, right? This is going to be a very busy week as we sort of filter through the various data. Now, just before I go into the calendar, just reading an interesting article here on the Russell, okay, the small caps, okay, it's apparently a bit of a telltale sign. If the small caps are in trouble, they lead the market towards or where it's going, right? We're talking about recession. The small caps are lower, but there's actually a bit of devil in the detail. And I'll just take you across to this page just to show you what I'm talking about. And there's a lot of, there's a double whammy here, right? A lot of the small caps, when you are looking at the way they do business, there's a huge percentage of them. If I can just find this here, it is up here. So most of them, 60% of small business owners use a small or regional bank, right? So it goes some way to explaining why the small cap Russell 2000, why it's getting hit. But then it sort of leans towards the situation that the Russell 2000 does lead the market towards, you know, where things are sort of going. Okay, and as I said, towards recession. If things are booming, the small caps are the first ones that really shine. So that's something that we're going to have to keep a very close eye on. To me, it's like the news services are fishing somewhat. Okay, they like to go in and find a little bit of trouble. But if this is out there in the market, you need to know about it, because that seems to be influencing the market at the moment. Now, let's just go through the data this week. As I said, you've got opportunities across all time zones, and the data now is very active, right? The central banks have all gone through, or most of them have gone through a bit of a hiking cycle. Australia, New Zealand, UK, the ECB just aren't in the game at the moment, and obviously the Fed. So we are sort of starting to watch, see what's going on, the Bank of Canada also. But let's just have a go through the week here. So Monday, okay, building permits in Australia, something to look out for. I think building permits, housing globally, something to watch very closely, as well as the consumer sentiment numbers. EU industrial production numbers, yep, worth a bit of a look to have to get things started. And the New York Empire State Manufacturing Index there as well. Sorry, I just brushed over the housing numbers there in Canada. So as you can see, as we sort of start to go through here, you're going to start to find we have got a lot of activity across the board. Now, I'm not sure what's going on with these Westpac numbers, but they were scheduled every day last week. So I'm not going to sort of hold my breath there. RBA minutes, of course, important. One thing on Tuesday, we had last week the Chinese inflation numbers, which were very weak. Now we're starting to see the impact of Chinese numbers on Australia and New Zealand, in particular in the Asian session. So keep an eye on the Asian numbers in that Asian session Chinese numbers in the Asian session on Tuesday. And then we've got the UK employment numbers, okay, a heavy impacting number. And then you've got the ZEW economic sentiment numbers in the Eurozone there on Tuesday as well as obviously the GDP and the employment change. But I like the sentiment numbers a little bit better. You come into the North American session, we've got Canadian inflation numbers and US retail sales, both at the same time, right? They don't make it easy. And then you've got, following up with that, industrial production numbers out of the US there afterwards as well. I like this sequence: US retail sales followed by industrial production. We could get a flow-on effect, and we are, well, they're looking for a bit of a bounce back in some of these numbers, but, time will tell. What it means is we're going to have very active trading sessions across all time zones. You come into Wednesday's trading, one of the key numbers for Australia, the wage price index, okay, very important for wage inflation. See what's been happening there, whether it's kicking in or not. Industrial production numbers out of Japan. You get some inflation numbers there out of the EU zone. Pen's just gone a little bit wonky there. And then you come back down here into the North American session. Once again, building permits, housing numbers out of the US, and the gasoline stocks, very important for oil. Scrolling down. Now, the balance of trade numbers out of Japan, to me, that's a nothing number. I wouldn't be getting too excited about that. Australian employment numbers, very important. Canadian housing. Then you got the Philly Fed Manufacturing Index, CapEx, and a few other Philly Fed numbers there as well. Then you come into Friday. Well, actually, let's not leave out the existing home sales on Thursday. Friday, well, inflation, you've got to keep an eye on that for Japan. That's something we should look at. GFK consumer confidence, once again. And then I think that's all she wrote. I know we've got Canadian retail sales to finish the week, and Fed Chairman Powell speaking on Friday as well. So pretty much a very active week, right? And the good thing about this is it's not just massive, heavy-hitting numbers, right? These are good second-tier structured numbers that are going to tell us a lot about what's happening underneath the core market. These inflation numbers out of Canada, obviously very important for the Bank of Canada. So that's going to be a huge event. And then obviously that follows in with retail sales out of the US industrial production. So that could be one of the key weeks to really tune in. Well, actually, that whole day, Tuesday, really kicks things off. You've got numbers across the board: Asia, Europe, North America. If there's something for everyone there. Now, don't forget, you don't just rush in to see what's happening. We have to factor in, what's happening on the equity markets. Like at the moment, US equity futures are down. Are we seeing a risk-off day? Not at the moment, right? Because I think the market's in a little bit of shock, trying to work out, like, what's going on here? Like, what's going on in the market? I thought we had US dollar weakness, but we're not seeing that. Now, experienced traders will be looking at this going, okay, a lot of uncertainty around the dollar here. You can see the US dollar rallying across the board. If there's any news around the regional banks sort of settling down, or there's, a bit of resolution there, then we're going to see this move corrected very quickly. Okay, as I said, I think most of this move are long positions just taken out, and we may see that correct. But we are in a bit of a transition phase, and this is where the economic data can really impact, right? So if we start to see further weakness in the US numbers, well, you'd expect these moves to continue, and then vice versa, a reversal if they come in strong, right? So there's a lot of different things happening. Give it a day. It's a great day to sort of go through your technical analysis, get everything tuned up, try and work out what's happening on the equity markets, the currency markets, and the commodities. And then you can start to piece together the actual trading opportunities and where the data might really impact. Okay. Once again, reading the various commentaries will go some way to preparing you around what's happening, give you an understanding of where the markets sit and where to attack from, right? That's what we're going to do this week. As I said, there's a lot of activity. Don't necessarily charge into every opportunity, because when you start looking at these major events, okay, like I've spoken to a few traders about this, Don't necessarily chase everyone from the Aussie to the, say, German data to the EU to Canada to the US. When you're trading instruments, whether it's equity indices, commodities, or currencies, get a favorite instrument that you understand what's happening and then focus on that one instrument. So generally bouncing from one currency to the other, or different equity indices or commodities, you can come unstuck because you're trying to cover too many angles. Focus on where you are at your best. And usually that's one or two instruments. Focus on those and your performance will probably improve because you're not spreading yourself thin, trying to work out what's happening across the board, right? And this usually works out because if you're based in Canada, you focus on Canadian data and US numbers, right? Makes sense. Then you don't have to worry about what's happening in Australia or New Zealand or somewhere else because you're focused on what you can see, what you can feel, what you read in the papers, what you see on the streets, right? This is one way to really fine-tune your overall performance. Don't spread yourself thin. Look for the good opportunities. Don't rush in for the economic data release. Make sure you understand what's happening and what the implications for the numbers are before you jump in. All right, guys, good luck. Big week. All the best. Cheerio.